Tonight, Binaries 101. What is a Nadex binary? What's the value of a Nadex binary? What markets can I trade? How to place orders? Getting started. All right, so again, tonight's going to be very basic, elementary, starting as if you are brand new to Nadex, brand new to binaries, and you know nothing. All right, so what are they and how do they work? First of all, let's talk about some of the benefits of trading Nadex. All right, all of Nadex products have defined capped risk. All right, that's one of the positive things about Nadex. With Nadex binaries, you have no stop outs, no whipsaws. You have limited defined risk that is known before you ever enter the order. You can never lose more than your defined risk, and your defined risk is your margin. Your maximum risk is your margin, which is the amount that you put up to actually enter the trade. And I'll show you some examples of that. All right, you have no margin calls, very low margin requirements. You can do one binary contract, you can do hundreds of binary contracts. So what are binary options? Well, they're not long-term trading instruments. These are not options that you hold or like stocks that you hold for months and months. All right, these are short-term, very fast-moving contracts with only two possible outcomes at expiration. And that is, it's a binary, which is yes or no, 1 or 0, true or false. Basically, at expiration, a binary is either worth 0 or it's worth 100 at expiration. It's a true or false statement. Either the event does happen or it does not happen. All right, you can hold a binary all the way until expiration, or you can exit it before expiration. Let's say that you buy a binary thinking the market is going to go up, and the market does go up. And you don't want to hold it all the way to expiration. You just want to take part of your profits now and close the contract. You can do that. Let's say that you buy a binary because you think the market's going up, but it doesn't. The market starts to go down against you, and you don't want to take the full loss down to 0. You want to get out early. You can do that, and I'll show you an example. Okay, so you can hold a binary till expiration, or you can exit early. Okay, and you can have, with a binary, you can have dramatic changes in value regardless of market volatility. What do I mean by that? Well, you can trade binaries in volatile markets or flat markets, meaning even if the market's not moving a whole lot, even if it's not a huge trending day, the value of a binary can still be affected quite a bit, even with a small move. And I'm going to show you an example of that and what I mean by that. And what's great by that is it gives you a lot of different trading opportunities. All right? You can have multiple plays in your playbook. You don't have to. Some people say, oh, I have a great trading system. I have this great trending trade system. But I don't really get to do anything if the market's not trending that day. If it's a flat day, I don't really get to trade a whole lot. Well, it's a nice thing with binaries is it doesn't matter. All right, you can have trending systems, you have range-bound systems, you can have flat day systems, volatile systems, and I'll show you where you can get some more information on all those different systems. Tonight, I just want to basically talk about what is a binary, how does it work, very basic. At the end of this webinar, I'll go back to the Apex website and show you where you can watch videos on multiple different ways to trade it. So after you understand what it is, I'll show you where you can go get free information about what to do with it, how to trade it. And not only just how to trade it, not just one way, but multiple ways with different market conditions. So, like I said, even if the market's not volatile, the price of the binary can be volatile. This allows you to leverage the volatility of the Nadex binary itself for a potential high percentage return, but with capped risk and rewards. Okay, so even if you are new to trading, you have a smaller account, your risk is capped. Okay, so even with a moderate investment, you can still have great trading, great high percentage of reward potential without the high risk. So, limits of risk on binaries. The floor is 0, the capture risk of a long position, and the profit of a short position. The ceiling of 100 caps the risk of a short position and the profit of a long position. Okay, and I'll show you what we mean by that. All right, and with binaries, you never risk more than $100, normally quite a bit less. So let's just break this down real quick. First of all, let me pull up the Nadex website here one more time. Okay, let's just say, for example, we go right here to Forex binaries. We select the euro dollar. You see right here, there's some binaries that started at 6 p.m. and they expire at 8 p.m. There's some binaries that opened up at 7 p.m. and they expire at 9 p.m. We have this daily one here that expires at 3 a.m., this one 11 a.m., this one 11 a.m., 3 p.m. All right, binaries open up at a certain time and then they expire at a certain time. And again, you can hold a binary until expiration or you can exit it early. So let's just, for tonight's example, let's select this 7 p.m. to 9 p.m. that's on the Nadex platform here. Okay, first of all, what is a binary? Well, you see right here, see this list here? And see these different strike prices, 1.0814. These prices right here are called strikes. That's the binary strike price. 0814, 0818, 0822, 26, 30, and so on. So each one of these is a different binary contract, a different binary option. All right? And let's just choose this one right here. What is a binary contract? It's simply a statement, all right? And it's simply a yes or no, true or false statement. What this binary contract states is that the euro dollar will be greater than 1.0838 by 9 p.m. Eastern Time tonight. That's it. That is a binary contract. If I click this, it's going to open up a ticket for me to enter this contract. And again, this contract says euro dollar be greater than 1.0838 by 9 p.m. Will it happen? Will it not happen? Yes or no? What do I think? I have my charts, I have my indicators, I have my strategy, I have my system that I'm using that's let me know where the market is going. So I'm going to say, okay, yes or no. If I say yes, I believe this is a true statement. I believe the euro dollar will be greater than 10838 by 9 p.m. I think yes, true. Then I want to buy it. The offer side right here is the buy side because I think this will happen. Yes. If I think no, I don't think this will happen. I think the euro dollar will be less than 0838 by 9 p.m. I think the statement's false. I don't think it'll happen. Then I'm going to sell it. So I'm basically saying yes to buy, no to sell. That's really it, guys. That is a binary contract. All right? And that's just one of them. I just chose this one. There's different strike prices to choose from. Okay? There's different prices. This is what I can buy one for. This is what I can sell one for. Here's the offer size. Right now there's 50 available of this one, 50 available of this one. Okay, some of these are way out up here, right? And there's not very many of them. But I can choose which contract I want, okay, based on where the strike is and what pricing I like. But that's all I'm saying is yes or no, okay? So let's move forward with that and understand some of the pricing and the risk reward. So let's take a long example. Long meaning I'm going to buy because I'm saying yes, I think the statement is true. So at expiration, a binary is either worth 0 or worth 100, okay? At expiration. Now again, remember we can exit early. So let's just start here with basics. If we buy a Nadex binary at $25, our maximum risk is $25. Okay, on the buy side, when we're buying or going long, okay, whatever we buy the binary for, that's the amount of money that we're putting up out of our account. That's the amount of margin we're having to put up. That's the amount that we're putting into the trade. And the amount that we buy a binary for is our maximum risk. We cannot lose more than what we put in to buy a binary for. So if I buy a binary for $25, that is my maximum risk, my capped risk. I cannot lose any more than that. My maximum reward is what? $75. Because if I buy a binary for $25 and I hold it to expiration and the statement expires true, then it's worth $100. So I put in 25, it expired being worth 100, so the difference is $75. So the amount that you buy a binary for is your amount at risk. And this risk amount is the money that you're putting up out of your account to place the trade. And the difference between where you buy the binary and $100 is the max amount you can make. The actual amount you put up is the most you can lose. Okay? It's pretty simple. Now, so let's look at another example. Same thing, going long, buying a binary. If we buy one Nadex binary, because notice over here, let me pull up the platform again. Notice I can buy this one for $8, this one for 13, 22, 37, 54, 70, 85. They're all priced a little bit different depending on where the strike price is, right? Okay? Because again, all I'm saying is, yes, the market will be above this. Well, what if the market's already above one of these? Well, then it's going to be priced a little higher, right? A little closer to 100. Okay? So if we buy a Nadex binary for $75, well, again, remember on the buy side, whatever amount we buy it for, that's the amount of money that comes out of our account. That's the amount of money we put into the trade. And that is the most we can lose, is the amount we buy for. So if I buy a Nadex binary for $75, my maximum risk is $75. And my maximum reward is going to be what? Well, if I bought it for $75 and it could expire in the money worth $100, then the most I can make is $25. Okay, so whether I buy it for $25 or buy it for $75, wherever I buy it in between here, the most it can be worth at expiration is $100. The least it can be worth is $0. So whatever I buy for is my max risk. So now let's look at the opposite side. Let's flip it around and say, well, what if I think the statement is false? What if I don't think the market will be above a certain amount? Okay? What if I don't think it'll be a certain amount? So I want to sell the binary. Okay? Hold on here. Dave says, so in the long example, and buying the $25 binary, does this mean that the binary will be 75 pips away from the strike? No, Dave, with binaries, it has nothing to do with pips, okay? It's not like a spread. A spread is like $1 a pip, okay? With a binary, it has nothing to do with number of pips or number of ticks away from the strike, okay? It all has to do with a probability, and I'm going to show you that here in just a second, okay? Well, that's a good question, but no, I'll show you how that works here in just a second. So let's say we're going to sell, okay? Again, at expiration, a binary is either worth 0 or 100. If we sell one Nadex binary at $75, because remember, we're not going long here, we're not buying, we're selling, we're going the other way. So if we sell at $75, my maximum risk is only $25, because my risk is the difference of where I sell compared to 100. Okay, it's the opposite of buying. So if I sell at 75, my risk is only $25. My maximum reward would be $75. So the amount you sell a binary for is the maximum amount you can make. The difference between where you sell it at and $100 is the amount you put at risk. Okay, does that make sense? If there's any questions on this exact part right here, let me know. It's the opposite of buying. So if I sell at 75, the most I can make is 75. The most I can lose, the difference of 75 to 100, which is 25. Let's look at it a different way. Let's look at it right in the middle. If I sold a Nadex binary for $50, okay, the most I can make would be $50. The most I could lose would be the difference of where I sold compared to $100, which is also $50. Okay, so that's the difference of that's what a binary contract is. That's the difference of buying or selling. All right, so let's take a look here, and Dave, this will answer your question here, okay? So let's take a look at a ticket here, an example of a Nadex ticket. Let's talk about risk and reward. So let's just say, for example, we selected this particular binary option contract, stating that the euro dollar would be greater than 1.3960 at 3 p.m. And right now, I can buy this contract for 85, okay, or I can sell it for 79 right now. So I open it up and I select buy, right? And I put in quantity of 1. Well, and let me just show you an example here. All right, let's go right here onto the platform. I'm going to select this one. I'm going to click that I want to buy it, and I want to buy 1. Boom. See what it filled out for me automatically right here. If you ever get confused on the difference of buying and selling and what is my risk and reward, you'll learn it very quickly, okay? But if you ever get confused, you don't have to worry about it, because before you ever place an order, it tells you right there. Okay, hey, I want to buy this contract. Okay, so you're buying, you want to buy for 72.75. Boom. So your max loss, your max risk is 72.75, the amount you're buying it for. Your max profit is 27.25, which is the difference of this price compared to $100, just like we talked about. Okay, and so it pops it right up there for you on an order ticket before you ever enter the order. What if you're like, oh no, wait a minute, I was wanting to sell. Okay, I want to sell it at 62 bucks or $61. Well, then your max loss is $39. That's the most you can lose. How does that figure up? Well, because 61 is where you're selling it, so that's the most you can make is 61, and your risk is the difference of $61 compared to $100, which is 39. Okay, so it's all right there for you. Okay, so we can buy this Nadex binary right here for $85. Okay, we can buy it for 85. We can sell it for 79. What I want to help you understand here is we're going to talk about the midpoint. What do I mean by that? Well, if we take 85, the amount I can buy it for, and 79, the amount I can sell it for, we add those two together, that equals $164. If we divide it by 2, so we have a buy and a sell, we added that divided by 2, the average is $82. This price point tells us that right now at this second in time, that it believes there's an 82% chance that this binary will close above 1.3960. Okay, so you can kind of look at the buy and the sell side, figure out what the middle is, and that kind of gives you a percentage of probability of that binary expiring in the money. Okay, does that make sense? And what do I mean by that? Well, let's take a look here real quick. All right, so Dave, for example, I want to show you this one right here. Okay, so this euro dollar contract says the market will be above 1.0834 by 9 o'clock, right? Well, what is it at right this second? Right here. It's at 0834. So right now, the market is exactly at that same strike price. And see where this is priced at? 56 over here, 46 over here. Right around what? Right about 50 bucks. Right? Well, why is that? Well, because at expiration, a binary is going to be worth what? Either 0 or 100. Right? But right now, we've got some time till expiration, and the market's right in the middle, like the market's right at the strike price. So we don't know, right? It's right at the price. Is it going to be above it? Going to be below it? We don't know, so it's kind of 50-50 right now. Does that make sense? That's why the option is priced around 50. It's not priced closer to 0 or closer to 100. It's priced right around 50 because it's still kind of 50-50. It's right on the fence. That makes sense? Now let's look at this one. Why is this one priced at $87 if I want to buy it? I mean, if I buy it for $87.50, I'm risking $87.50. My max profit's only like 12 bucks. Why would I want to ever do something like that? Or let's look at this one. This one right here, this one's priced at 76 bucks. If I buy it, I'm risking 76 and I can only make 23. It's kind of risky, right? Okay. But remember what we talked about here? That other one that was priced around 50 had about a what? 50% probability, right? Could go either way. As to where this one has more of about a what? 73, 74% probability of winning. Why? Well, what does the statement say? That the euro dollar will be over 1.0830 at 9 o'clock. Where's the market at now? 0835. So the market right now is already over this price, isn't it? This is what we call an in the money binary. It's already in the money. If we bought this binary and it expired right now, it would automatically win, right? Because all we're saying is that it will be above 0830. Right now it's at 0835. It's already 5 ticks above it. It's already over that. Does that make sense? That's why it has a higher probability of expiring in the money, because it's already in the money. And therefore, that's why it's priced a little bit higher. Okay, so Dave, does that make sense? It has nothing to do, when you're talking about options, it has nothing to do with number of ticks or $1 a tick or $10 a tick. It's not about dollars per tick. It's all about probability. Okay, so that's kind of like what I just explained there. If the market's right about the same as the strike, that's why it's priced around 50, because it's kind of 50-50. You know, if it's above the strike, the market's above the strike already, like here, it's going to be priced higher than 50 and closer to 100. It's more of a probability. Okay, let's look at another quick example. Look at this one down here. Oh, hey, I like this one. I can buy this one for 24 bucks. I'm loving that. I'm only going to risk 24 bucks and I can make 75. Ooh, I like that, right? Well, 24 and 6 and 15. What are we looking at there? About a 20% probability, right? So you like the low risk, but you also have very low probability. The only reason you'd ever want to buy something like this is because your chart, your indicators, your strategy, your system's telling you to do it. Why is that? We'll look at the statement. Statement is the euro dollar to be greater than 1.0842. Where's the market right now? 0834. The market's 8 ticks below this. So what does the market have to do for this thing to be worth anything? It's got to go way up, right? Does that, everybody follow me? If the market's at 0834 and you're saying it's going to be above 0842, you're stating that the market has to go way up in order for this to be profitable, right? And since it's so far away from it, that's why it's a smaller risk of 28 bucks, because it's a smaller probability that that will happen. Okay? So does that make sense? When the market's way far away, or the market's far away and has to move one direction, it's going to be a lower risk trade, less money, but much less probability. When the market's kind of right at that strike price, it's kind of 50-50, could go either way. When the market's already, when the statement's already true, it's going to be priced a little higher. Does that help a little bit, Dave? And that's a great question. I'm glad you asked it, Dave, because other people are probably wondering that too. It's not about dollar per tick or certain amount of dollars per tick. It's all about a probability compared to the statement saying the market will expire above this or below this, and you're saying yes or no. Okay, does that make sense? No, we don't have any type of calculator that calculates that for you. It's just kind of right there for you to see, you know, on the Nadex website, even of I can buy it for this, I can sell it for this. So what's kind of right in the middle there? About 50. Cool. Okay. So, and the ticks, what I mean by tick is exactly what's stated here. All right. 1.0838. Okay, as to, right here, 08340, like it's stated right here. What determines whether this win or lose? The Nadex indicative, the current market price right here, the Nadex indicative. Okay, and you know, so yes, how do I trade these? How do I do? Well, we'll get into some of that more in some of our future webinars, and I'll show you where you can get some good information about that. But you can't just randomly go in here and say, oh, I like this one because it's really cheap, or I like this one because it's a real high probability. Well, just because the market's above it right now doesn't mean it's going to stay there, does it? If you're just randomly clicking something because you like the number, you're just gambling. You're not trading. You might as well just go to Vegas and pull a lever or throw some dice. You have to have a trading system. You have to have charts and indicators and strategy and systems you're using. You can't just be clicking buttons. Okay? You know, Joseph asked, was there a trick to predict if it goes up or down? There's tons of tricks, all right? There's tons of different strategies or systems. I'll show you where you can get some more info about those. But you have to have a system that you're following. Okay? Let's see here. So there's 3 or 4 ticks just like I won. Michael, so that one is 3 or 4 ticks, just like a 1 tick move on my chart. It all depends on what you have your chart set to. Like, you know, I mean, if you're trading the indices, for example, like if you're trading Forex, you might have your chart set to 1 tick, 1/10 of a tick, 1/100. It all depends on what your chart's set to. You know, if you're trading like indices spreads, for example, or indices, like if you're like the Wall Street 30, you know, which is the Dow. I mean, 17,900, I mean, 1 tick is 1 tick. You know what I mean? Yeah, if you're trading currencies, just all depends on what you have your chart set to there. Okay. But yes, if you want to equate it to Nadex, yes, it's going to be the last tick quoted there. Okay. So like if you're saying the euro dollar to be above 133.63, okay, it can't be 132.62999. Okay, it has to be, or if you're selling it, for example, like when I'm saying, oh, it'll be less than 133.63. Okay, it has to be less than 133.6300. Okay, so all right. So again, on the ticket, it will show you right then and there your max profit and max loss. Okay, so in this example here, if we buy the binary at 85 and it closes above 39.60, then we'll get the $85 back that we put up for the trade plus our $15 max reward. If we were to buy it for $85 and we held it to expiration and it did not happen, the market was not above it, then our max loss would be the $85. Okay, so on a Nadex ticket, keep in mind, if you're selling, your risk is the difference of where you sell compared to $100. So let's say that I thought, nope, this statement is not going to happen. The euro dollar will not be greater than 1.3960, so I want to sell it. Well, then if I were to sell it, okay, or let's look at this example of selling it for $82. Well, if I want to sell it for 82 bucks, okay, whatever I sell for is my max profit potential. And the difference of where I sell compared to 100 is the most I'm risking of $18. Okay, so for example, this particular one I can sell for 87, or I can buy for 87 or sell for 82. And again, we talked about the midpoint. 87 plus 82 is 169 divided by 2, about $84.50. So that would be the probability of it expiring in the money. Okay, which means on the sell side, it's only about a what? About an 18% probability. Okay, so again, on the buy side, whatever amount you buy for is your risk. On the sell side, whatever you sell for is your potential reward. All right. So now what happens when the strike price is equal to the indicative at close? Evelyn, good question. Okay. So if I am going to buy a binary, and I buy this binary saying the market would be above 1 point, okay, what I'm saying is it would be greater than 133.63. And I'm buying that, saying that's true. Well, if the market expires right at 133.63, was it greater than? No, it was right at it. Okay, so on the buy side, that would be a loss. Okay, because it has to be greater than. Okay, now on the sell side, it would be a win if it expired right at that, because it was not greater than. Does that make sense? Because if I'm buying it, I'm saying, yes, it would be greater than this. And if it expires exactly at that, then it was a loss because it wasn't greater. But if I sold it saying, nope, I think the statement is false, I don't think the statement will happen, I don't think it will be greater than 133.63. So I sell it, and it expires right at 133.63. Then, hey, the statement was false, right? It wasn't greater. Okay, so on the buy side, if it expires at the same amount, it would be a loss. On the sell side, it would still be a win, because it's all just that simple of, was the statement true or false? Okay.